Yeah, I don't think tonight's session is going to be too long because, I mean, for the first part of the week, there won't be much happening. And then, um, only later during the week we'll potentially see some movement. I'll just share my screen here. Let me know if you can then see it before I jump the gun and the same thing happens that happened last week. You see. You can see it? Awesome. Alright, let me just remove this thing on my side because now it's not picking up the correct screen for the recording. And now I just need to send it back. Okay, cool. There we go. All right, so yeah, as we can see today, we had a bank holiday for the US. So typically when the US is out of commission, that means that most of the markets are going to be quiet because, I mean, most of the liquidity is coming from their side. And also in terms of session time, I don't typically trade the Asian session. So yeah, nothing really happens there. And then London, for me, London has been pretty slow for the past few months. I'm not sure if it's just me or just the pairs that I trade, but yeah, London, I haven't really seen anything happen there, so nothing there. And then obviously the New York session, no volume today due to the bank holiday, right? So looking at tomorrow we don't have any high impact news scheduled, so yeah, I'm not expecting too much of an exciting day. We only have Empire State Manufacturing Index data coming out, but that's not really a market mover. Markets are also mainly just going to wait for the FOMC Meeting Minutes to come out on Wednesday, right? And this is scheduled for 9 p.m. South African time. It's not really a time that I like to trade because then time and price is out of sync. So then the market only moves based on the volatility of that specific move and then nothing else thereafter, right? So you can't really gauge then, how far the market is going to move, how consistently it's going to follow through with that move, mainly because of the volatility of that that news that comes out, and then also due to time, right? Because especially when it is the morning session US time and then also the afternoon session US time, there's specific types of movements that you look for at those times. But yeah, FOMC is just the volatility of the news, and thereafter not really much, right? Unless it's crazy news in terms of the interest rate, then you might see a massive drive in price. But yeah, it's not really, I don't want to say feasible, but it's not really measurable to say, right? But yeah, let's move on to Thursday. On Thursday, we have unemployment claims coming out again. So this will be new data coming out for unemployment claims again. Hopefully, we'll see some movement then on Thursday. Like I said, Thursday this time I won't be in because my mother's flight is at 5-ish, past 5 South African time. So yeah, during this time I'll probably be at the airport. I won't be able to give updates. But if I do get the chance to sit still, then I'll try. But I doubt anything will come from my side. But the nice thing about the unemployment claims coming out on Thursday is that it is the only high impact news event that's set to be released. And it's also just at 3:30 South African time, which is nice in terms of time and in terms of volume and volatility, right? And then yeah, so we'll see if there's a nice clean move on Thursday. You guys know what to look out for. And then on Friday, we have a mixed bag of different news coming out. So we have GDP news coming out. This is a big one for the markets. And then we have PMI coming out also. In terms of timing here, so after 3:30 p.m., right, you might be able to get an opportunity for an impulsive move. So just before 3:30 or at 3:30 or just after 3:30. In terms of trading my fundeds, it's not really something that I would like to do. I would probably have to then wait until 3:35 or 3:40 for a potential move if there's an impulsive move. If there's nothing, I would then need to wait up until 4:45 for then, some volume to come in, and then to possibly create a move for the 5 p.m. South African time candle to then follow through with that, right? So in terms of the PMI data. But yeah, other than that, if these two news events are conflicting, it won't be too nice for us in terms of the actual volume. We might see some volatility and then maybe some consolidation if these events are conflicting, right? One is positive, one is negative. It's not really something we want to see. But if both are in alignment, we might see a very good positive move or a very good negative move to the downside, right? So just keep an eye on this. Yeah, so that's the week. Like I said, I'm not expecting too much. If we get some movement in price, it might just be, big players at play, and then price moving from one side to the next without giving us entry opportunities, right, in terms of price. But that's something to keep an eye out for, right? So yeah, moving on to the charts. Let me just share this tab quickly. Yeah, I've mainly just been looking at the Nasdaq last week because I was seeing clearer price action, and I wanted to be able to send that through to you guys as well. Sorry, let me just close this door because my wife is watching Bridgerton. Yeah, let me just look at price today. Today, like I said, there was a follow through in terms of price after the open, but as you can see, just an influx of volume, but no real entry opportunities in terms of the system and in terms of an impulsive move, right? What I would have liked to see after the open is a move that comes back into this imbalance, creating some structure right here or in and around this area, and then for it to follow through. But yeah, like I said, right? And I don't typically like to take trades on the lower time frames because this means that my probabilities are much lower and I would need to enter more, which means I would need to risk a lot more. The gains at the end of the day is nice if you make up for it, but just in terms of consistency and in terms of the system, you see better growth on the 5 and 15-minute time frames, right? Nasdaq, in most cases for me, also gives me clearer entry opportunities and price action on the 15-minute time frame. So on the 15-minute is where I would have liked to see this fill here of this imbalance for a nice follow through. Okay, but yeah, that was today. Let me just remove this and let me unpack the week in terms of structure. Right, so in terms of the daily structure, we are sitting in and around this daily order block range, right? So this is our range high. This is the order block that price is currently in. This range high has not been invalidated yet, which is nice. And then the low is this one down here. There we go. I think I got a message. Just let me check here quick. Edison asked, is it disconnected? Hey Eddie, not Eduardo, Edison. Let me just see. At Edison. Nope. We are online. Ah, there he comes. Hey Edison, can you hear me now? See you back in. There's no feedback from Edison yet. Alright, so in terms of the daily range for us right here, right? We are sitting within this structure. Now, in terms of our FOB, let me just take it from the low to the current high of price. Right here, we can see that there is still some potential for price to come down to the 78.6% FOB to then possibly find structure in and around this area for a possible bullish follow through. So let's just check what price has done on the 1 hour time frame previously to see if there's potential move. Right, let me just draw this in nicely. Okay, so as we can see, price has currently closed out this imbalance that we have here on the 1 hour time frame to the left. Okay, price wicked into it, and now it has formed some structure in and around this area. We are kind of seeing potential for price to go a bit higher due to these lower probability bearish order blocks that we see here, right? And here we have a higher probability bullish order block at this range low right here, right? So there could be some potential for price to run higher into this imbalance before it potentially comes lower into this area here to then possibly take out these lows for, you know, gathering some momentum and to close out orders for price to then move higher. Or there's also the possibility of price coming down first, just in terms of volume and volatility and whatever orders we receive tomorrow and, you know, the rest of the week. We might see price run down here first and then potentially come up here to go and close out these imbalances that we have here, right? Okay, let's look at price in the opposite. Let me go back to the daily time frame and see what structure we have for a potential bearish move. So I'll delete the fib and then I'll draw it from the bearish order block to the current low in price. There we go. Let me go down to the 1 hour time frame, and here we can see that there's a bit better alignment in terms of a longer term bearish move as opposed to a longer term bullish move, right? So right here we have our swing low, we have our imbalance right here, oops, and we can see that there's a 78.6% fib that aligns with an imbalance there to the left, right? So like I said, depending on where price heads first, either to this bullish 78.6% fib low that we saw here, this fib level, sorry, so then potentially go higher, or what price could do is just, you know, take out these highs, fill this imbalance, get to our 78.6% fib. Now, depending on time and price, again, right, where is the market before it opens, or where is the market after it opens, right? And where are the next group of orders lying that is closest to where price currently is on the open, okay? Hope that makes sense to you guys. So that will then be a determining factor as to what price does, okay? Now, again, if we see price consolidate in and around this area before market open, you could see some, let me redraw it in, consolidation, then market opens, then we see that manipulation leg into this imbalance, and then distribution on the higher time frames, right? So that is a nice potential move, but like I said, it just depends on time, price, and the data we receive, right? But what we are mapping out now currently is just to see, where those points of interest are that the market wants to drive towards. Okay. On the weekly time frame, we are strongly bearish. However, in terms of how price opened this week, right, let me delete all of these. We can see that all good, Hazy. We can see that price opened pretty bullish, right? So this was our open, that's our high, that's our low, and our potential close is still coming out, right? So depending on how price closes today, would then also determine what price would do for the rest of the week, okay? If we get some nice bullish momentum to then close this candle bullish, we might see better movement to go and fill out this imbalance on the 1 hour time frame up here, right? But that would be determined by the daily time frame, like I said. However, if price closes bearish today, then I am expecting a bit more of a bearish run for the rest of the week. But again, that will be determined. Okay. But yeah, that's really it for the Nasdaq. US 500 is very, very similar. So it would be, you know, not the best idea for me to go through this again because it's the same thing. But do you guys have any questions, any concerns, anything you want me to go through specifically?
Hey man, I have a question, but it's just a quick one.
Sure.
Yeah, nothing much, nothing about the market. But I wanted to know, when we used to trade, we used to like wait for, let's say we have a manipulation of the lows or the highs, né?
Mm-hmm.
So when we have a manipulation of the lows, then we wait for the wick, the bullish wick to go into the range. Then we place a trade based on the trade if it's a eight trade tier or something like yeah.
Mm,
As long as it's making or it's doing what we want it to do. Né?
mm,
That's our setup. It aligns with our setup. But what I want to know is in the past when we used to trade né, last year,
mm,
you used to like wait for a second body candle to close fully inside the range. So I want to know now that like you trade I mean, how can I say this? Now that the body candle doesn't fully close inside the range, it can close in between the lines and you take a trade. Is that also okay for me to do? Because I've like taking like poor trades these days. That's why I've been backtesting a lot. So that's what I want to understand. If
mm,
it's okay, as long as it's inside the range, even if it's in between the lines and it aligns with what we want the market to do.
mm. So
Don't know
in
if you get
between
me.
which lines, though? In between the
Okay, yeah, you
opening
see,
range.
um,
Say
where
what?
the 8 a.m. candle is.
Okay, so this is the 8 a.m. candle.
So yeah, so those two body candles on the right,
One,
né?
two. Mm,
Yeah, yeah, that one. So let's say that's bullish.
mm,
So you see, it closed like that inside the range. So you can take a trade like that on the 5 minutes or 15. Okay, 15 minutes, okay, but on the 5 minutes, or you wait for a 5 minute full body candle to close inside the range for confirmation.
So, oh, I think what you're confused by is what I mean when I say full body, right? So, it,
Mhm.
so I think you mean, or you think from how I'm explaining that this is a full body, sorry, this is a full body candle,
Yeah, exactly.
right? This.
Mm-hmm.
But
Yes.
in terms of entry, where I would have entered is this, right? This candle right here. I just want the body
Mm-hmm.
of the candle to close in the range. Okay. So I typically
Mm-hmm.
don't
Yes.
want the body to close like this, right? Outside of the range. Because then
Mm-hmm.
this would give you a lower probability of that trade working out in your favor because price had not set its intention um, to possibly go and take out the next range high, right? So that's
Okay.
what I mean. So not one whole body in the range,
Yeah.
right? Just part of the body in the range, but it needs to be a bodied candle and shouldn't be just a wick closing in the range. Okay, kind of like this here. This would be
Okay.
this
Yeah,
would
yeah,
not
yeah.
be
I see
good,
it.
and like this bullish candle here, also not, right? So this is no, this is no.
Mm-hmm.
This one here would be a yes. Okay, this one would be a yes.
Okay. Let me take a screenshot of that.
Okay,
Okay. Thanks, man. Got it now.
cool. But yeah, this is not the best example because price came back to these lows and then just consolidated in and around this area again. Okay, but in terms of what you need to look for is basically just this this section here. Okay. All right. Here we can see that time and price was out. So here this was 9:35. That's when you had that manipulation. Price came back into the range today on US 500, but obviously we don't have that momentum or that volume to push price to the next high, right? We don't have enough orders then
Mm-hmm.
residing here. We also don't have enough orders in and around the next 1 hour low for the day, right? So there aren't enough orders. Boom, 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 boom throughout the day um, for price to then come and take out this next 1 hour order block low, right?
Mm-hmm.
And that's why we've just been seeing that consolidation of price on the day after the open. Okay, so time was there, it was right, 9:30. Okay, price was there in terms of what we want price to do. Okay, and how it closes in and around the range. Okay, but the volume and the volatility wasn't there because of this today. Right? Did I stop sharing now? Sorry.
Oh, stream just wanted.
Because of the bank holiday, right? No volume, no volatility means no orders, no liquidity for price to move to. Okay.
Yeah.
All right. Any questions, guys? Any other questions? I mean, nothing, guys. How was everyone's trading week? I want you guys to come with a lot more questions so I can answer a lot more.
John,
Yeah, bro.
sorry. I just want you to, sometimes a person, uh, you get into, like, I'm starting to get into the rhythm of working with the price and time now. Or I think I am,
Mm.
but there's always something that where I'm confused about is how do we determine when we know it's going to be a continuation, or whether we're getting that manipulation for price to distribute again to the next high or to the next low of that manipulated, because sometimes
Mm,
I would think, okay, because it maybe now went out of the range, and then I would maybe think, okay, right, this will be the manipulation, but then I end up taking the trade maybe into the wrong direction.
mm.
Is that where the higher time frame bias comes in?
Yes,
So if
100%.
we see that the high time frame bias is bearish, and we see the movement going to the upside, obviously with some volume, then we know that there won't be any pullback to it, and it will just continue.
Yeah, yeah. So let's say on the daily time frame, right? What we want to look for to find our buyers is to see what the order blocks have done, right? In and around
Yeah,
that area, okay? So this right here, this day, um, yeah, Wednesday, 11 Feb. That's a very good example, right? Let me just delete everything. Then I'll add it again. Okay. So on Wednesday, right, we had this candle, right, where price basically wicked above this daily order block
yeah,
high, okay. But in terms of price action, okay, on the daily time frame, this is the
yeah,
daily order block, right? So price only wicked past it. It did not close with a daily candle above this range high, right? So we would only get a lot of follow through for a continuation higher, okay, if the daily closed with a body
above.
above this range high, yeah.
Okay.
But now on the other end, we have this order block here also, right? This is now the bullish order block in the opposite direction. Okay? There's the bullish order block in the opposite direction, and we know that there are orders residing below this range low here as well, right? And we can see that price then came to take out those orders, right? Now to find our bias,
Yeah,
or to find my bias, what I like to look at is just where price closed currently and where it opened currently, right? So the previous 3 days. So here, structure was basically still building with Friday
yeah,
6 Feb and Monday the 9th of Feb. We still had structure building because we did not take out this high here. And then on Tuesday the 10th, this day now confirmed our structure, right? So even
yeah,
on the Tuesday, you could see that the overall bias for the day is bearish, okay, just for that specific day.
yeah,
But the overall structural move, right, in terms of where price was and where most of the presumed orders are, because price is at ultimate highs, was supposed to be bullish, right? So now,
yeah,
in terms of this, you now need to decide, right? Because we can't see, we don't have order flow tools with us, right? Especially if you're just trading with candlesticks. Um, and especially if you're trading higher time frames, right? Order flow is mainly just nice for 1 minute, 3 minute trading, right? And lower time
yeah,
frames. But now, in terms of structure, overall structure, price is bullish, but in terms of the day, price is bearish, right? So that is where you now need to decide, okay, am I going to go with the overall structure, or am I going to go with what price is showing me today? Okay. Now, if I go down to the 1 hour time frame, let's quickly unpack it. And then let me go to the Tuesday. That's, was it the Wednesday or the Tuesday? Let me just see again quick. Sorry. the Wednesday. There we go. Here we go. Okay, so on the Wednesday, right, we had this as our. Wait, let me just ask you quick. Do you want me to delete the big order blocks,
No, it's fine. It's fine. It's fine. It's
or the
fine.
following?
It's
Okay,
all good.
all right, because
Yeah.
I don't want that to confuse you. All right, so on Wednesday, this is our 8 a.m. Candle, right?
Yeah.
We saw this big push of volume, right? And the order
Yeah.
block before, the 1 hour order block before we had all of that volume was not this one. This one was already invalidated by this 4 a.m. candle. You can see that wick. Now, this was
Yeah.
the high that we had to look at, right?
Yeah.
Our low that we needed to look at, this one here was already invalidated by this candle, but I see we
Yeah.
have one here, right? So we still look at
Yeah.
the same structure. We have two opposite candles next to each other, and then we take the low or the wick to the body, right? And that is our daily opening range now, okay? In terms of the
Yeah.
daily structure, right? We had this bearish daily order block, and that is what price followed with, right? And that gives
Yeah.
you your bias. So now you just need to align yourself on the lower time frames with the daily bias. Okay, let me just go out. Here we go. Right. So in terms of structure, what I would have liked to see for a continuation move, right, is for price to push higher, especially past the daily order block highs, right? It did not close
Nice.
above the daily order block highs, right? It only wicked above it. There you can see, right? And then in terms of price coming back into the range, it did not close this imbalance here and then close outside of the range again, right? For a potential
Yeah.
continuation bullish move. That's not what we saw, right? What price then did, or what price did rather, was it still broke the highs, swept liquidity, came back into the range, closed in the range. There was a small imbalance here on the 5 minute time frame. Price closed that out, and there you had your um, reversal move basically, right?
Yeah.
And that is the move that I took, I targeted. There. So that was a 1 to 6 risk to reward on the day,
Mm.
okay? But in terms of overall price and what the daily time frames objective was, right? Remember the objective for the day was still this daily order block low here,
Yeah.
right? Now we didn't see that low being taken out on that specific day because I also closed out my orders right here because I saw that there wasn't enough volume and it was too late for the day also. There was a big pullback
Yeah.
expected on the day, right? But what price then did was it followed through with that move, I think, on the next day. And there you see boom.
Yeah.
And that's when you got that daily low being taken out of that order block. Then now price then also is kind of setting itself up for the next potential move, right? So
Yeah.
it's all an ebb and flow of the daily time frame and what it wants to do or is doing. So
Yeah.
so let me just delete all of these. Is it fine if I delete it? Just to clear it
Yeah.
up?
Yeah.
Okay.
I just wanted to just before you delete it quickly,
Hmm.
they and on the I think it's on the 5 minute. So
Okay.
if we wanted a continuation, we close above the order block,
Mm.
and then we would then try and look for entry, possibly like by the 50% level of that imbalance that's there. Am I right?
By this imbalance here,
Yeah,
no,
for the continuation, for the bullish continuation.
no, no, because if price just comes into the range now, right, and closes
Yeah,
out at the 50% mark, now it's a crucial level for you because it's at the 50% mark, so you know that that imbalance is basically filled, right? But now
yeah,
price would be confused because, well, not price, traders would be confused because now price is back in the range. You see, is
yeah,
price then going to continue ranging on the day, or
yeah,
is it going to continue to either side, right? So, where I would have entered or what I would have wanted to see for an entry is for price to close the imbalance like this, 50% at least, right? And then come
yeah,
outside of the range again, close outside of the
yeah,
range, create a high here, and then with this
yeah,
next candle, right, what you might see is a few wicks down here and then a body close above, um, whether these are wicks or whether it's bodies, right? I want to see a body close
yeah.
above it and then a small imbalance here, right? So then I would enter off of this imbalance here or this close here, this
Outside of the ranges.
outside of the ranges. But that would
Yeah,
be determined based on the hourly candles again, right? So
yeah,
is it just before the next hourly candle opens? Is it way before the next hourly candle opens, right? That's why time is important. So if you enter here, let's say, right, and it is 10:30, what you might still see is price come back down again before it comes back outside of the
yeah,
range again because that bearish 1 hour candle is still open and still hasn't created structure yet. You see? So then the continuation move that I would want is from this entry area here and then look for a 1 to 2 risk reward up here to the next um, range high or where the next form of liquidity is basically whether it's an imbalance or a 1 hour range
yeah.
high. That is what I would target, right? Also depending on
Okay,
time.
that's for
Yeah, so sorry, just to expand on that also,
yeah,
depending on time, right? So if it's earlier during the session, what you would most likely see is a um, an impulsive move, right? Where volume is still very strong, you still have lots of volatility also, right? And that's when you can typically have a smaller um, stop loss, right?
stop
Because
loss.
then you can work off of smaller ranges because you have all that volume, right? But now, if you
Yeah,
don't have all that volume, then you might need to work off of a bigger range, right, on the 1 hour time frame. So you might then need to set
yeah,
your stop below the overall range for the day and then target
yeah,
a higher 1 to 2 risk reward, right?
yeah.
Yeah, I hope that clears it up. It is pretty
No,
nuanced.
that is a perfect explanation. I just need to put it into practice because sometimes I get caught out like that
Mm,
where I'm I don't know if it's over eager or what,
mm,
but because I'm like you say, we can't already before the time just say confidence this is exactly what's going to happen.
mm,
So with me now again, I would have thought, okay, price comes into that imbalance, whether it's in the range or not,
mm,
the stop loss below the range, and then target the buys because of price already pushing up to the upside.
mm,
But then obviously, like you explained it, for it to come back in and then to create a new high outside of the range again, and then look for entry. But makes perfect sense now.
All right. Yeah. So, I mean, when you back test it, right, you'll also see it happening a lot. There's different variations to that move, but yeah, just typically in
Yeah.
terms of structure, where price closes needs to be outside of the range, right,
Yes.
for a continuation. Um, Let me just think back to some other moves last week that I could maybe show. But while I think about that, let me quickly just can I delete this now just to show you?
Yeah, yeah, you can. I'm okay.
Okay, awesome. So for me, right, what I always like to look at is just the previous three candles and where the current order block is, right? So, or basically the current three candles and the current order block. Okay, I hope that makes sense. So let me find these ranges. Okay, so for me to look for a bias here, right? If I'm on this day, on Wednesday, right? In terms of where price is a bit closer to these lows. Okay, so that gives me a tick for a bearish bias, and then also in terms of where price closed, right? The current order block is also bearish here on the day. So bearish candle close to create the order block, bearish candle open to confirm the order block. So the candle that confirms the order block also gives you um, a bit more sense of probability behind your trade, because if the day opens bearish, it's highly likely that it will continue bearish, right? The same as this one here, right? Um, but now we're talking about overall moves. Same with this one. Here we had a bullish close on the day. Price was overall bullish to then take out that next daily high here, right? But now if we look at this previous daily order block high, this is a bearish order block. What did price do? Price closed bearish, created this order block, followed through bearish, right? Same with this one here. Price closed bearish, but now it's still within the same range structure, but just to illustrate or to showcase, price closed bearish, Wednesday opened, Wednesday continued bearish, taking out this previous bullish order block here, right? So what price is ultimately doing is basically just ranging in and around daily order blocks, right? So here's the current order block for this range here, right? We have this bearish candle, this bullish one, this one open bullish, followed through bullish. Now it's the same if you look at the one just next to it. This here is a bearish order block, right? Price open bearish, followed through bearish, right? But did not close bearish. That's why you didn't have a continuation of that bearish run. But price closed bullish, that's why the next day opened bullish and continued bullish. You see? So these two candles already give me an advantage just to see, where the current day is going, or the next few days, up until we find structure again. We find structure, price opens bullish, continues bullish. See? So on the day or for the week, depending on which day creates the order block, you can already then either have your bias for that specific day or for the next 2 or 3 days. See, that's also why I say, depending on how today closes, will then determine what the bias is for the next few days, right? So if today closes bearish, my outlook for the next few days is going to be a bit more bearish because we still don't have any bullish structure that's been created yet. See? But now, if today closes bullish, my outlook for the next few days will be a bit more bullish, boom, 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 up until bearish structure is created again where price currently is. Yeah.
Now I understand the importance of the opening. Why you always talking about the opening candle of the next day after the order block. Okay,
Yeah, 100%, bro.
thank you.
No problem. But yeah, just to, sorry, I like going in depth sometimes. But just for you to kind of back test it, right? When you back test it, go day by day. When you see an order block, draw it out, and then you look at the previous order block, boom, and then you wait, right? You let price run and see, okay, where's it going to? If it takes out this daily high now or wicks past it, now it's invalid. Now you move to the next daily high, right?
Understand.
Then price is invalidated. Then you move to the next one, right? Until it's invalidated, right? You want to do that for both bullish order blocks and bearish order blocks because that will then get you in tune with how the market moves on the higher time frames so that you can then align yourself on the lower time frames and then move with it when that time comes.
Okay. Yes.
Okay. Yeah, guys. Any other questions? You see, I like these questions, guys, because
I like these explanations because takes out a lot of gray areas because there's times that I'm like think I'm doing exactly what you tell us to do, especially like the videos and the courses and all of these things. But then it's just there's the small things like which is not that small that I would think in my time in analyzing or that I completely miss, and then I just end up frustrated because then I'm doing everything, but then I'm taking buys when it sells or when I'm taking sells when it's buys. But these are the things that I'm missing out on, and it's not that I won't say it's not that complicated if you actually know what you're doing because then it like the way you explained it now it really clears up a lot. So yeah, I enjoy the explanations also because it really helps. I just need to put it into work now and then back test it so that it can actually wipe away all the bad habits.
yeah, 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 man. You know, remember, you still need to factor in losses into the system overall, right? Because sometimes even when all of your probabilities align and it's like an A plus setup in terms of, you know, structure, price action, time, volume, volatility, right? If all of those things align, you can still take that trade and be at a loss, right? But if it's skewed to either side, like you mentioned now, right? It's good to then start nitpicking and, you know, finding out, you know, why is this? Why is that, right? If you can't look back and explain it in the opposite way, then you either don't understand the system or um, you know something went wrong in terms of volume or volatility, right? So that's why I always tell everyone look at what price is doing in both directions. Don't just have one set bias for the day or one set move for the day, right? You need to still be fluid, but in terms of a bias, you want to know how you would take that trade technically, if you know what I mean, right? So it's hard to explain because there needs to be some form of middle ground still. It's, yeah, trading is weird to explain at times. Let me show last week Friday's move on Euro USD before we end off, right? Um, so last week, Friday's move on Euro USD was a typical continuation move. Okay, but in terms of volume and in terms of just that continuation, we did not get that, right? So if we look at structure, right, Thursday was bearish, right? And that's also why I said it is a lower tier setup, because the Thursday candle was still bearish, right? However, if you look at the current price action on Thursday and Friday on the daily time frame, you can see that Friday's wick had already swept Thursday's wick, right? Taking out that liquidity there, all right? Now, on the day, what you'll sometimes see is price takes out the low, continues to the next high or to the next imbalance to the highs there, right? Now, for me to take a bullish trade on Friday, even though the Friday candle is bullish, we still don't have bullish overall structure on the daily time frame, okay? And that's also why I said it is a lower probability trade, but just in terms of what price action was providing and was giving on the day was a potential bullish continuation, right? That's actually the incorrect high. This is the correct high. Let me delete this alert. All right, so if I go down to the 5-minute time frame, right, again, we saw that price had that big push in volume, right? So that is then the manipulation leg, right? After news came out, consolidation, manipulation, and then because the Thursday candle's low was swept by the Friday already, okay? My bias for the day was a bit more bullish, even though we still did not have bullish structure created, okay? Now, again, right, for a continuation move, we had that break of the high, price came back into this imbalance, right? Remember what I outlined earlier? Came to the imbalance, filled out the imbalance, closed outside of the range again, right? But now price is conflicting in this area, right? We don't have a higher probability bullish order block close on the lower time frame or the 5-minute time frame, and here we also don't have a higher probability bullish order block close on the 5-minute time frame up here, right? So now there's two different sides. Both sides are now conflicting with each other because there's no set structure here yet, there's no set structure here yet, right? The only time set structure is then created, or what price would deem as nice structure to follow through, is this bearish order block on the 5-minute time frame, and this is now a higher probability bearish order block. You can see that the wick of the bearish candle is higher than that of the bullish one. Okay, these are opposites. This one's bullish candle wick is longer than the bearish one. This is low probability, this is higher probability, okay? But now what we are working with is structure again, and that's also why it was conflicting for everyone on Friday, because now we have price action that's bearish, but we have structure that's still bullish. You see how price closed outside of the range? And that's where this battle started, of bearish, bullish, right? No one knew where they wanted to take their orders or how long they were able to keep it in the markets for. Okay, so we were just playing this tug of war for the rest of the day. And yeah, that's basically what happened. But in terms of entries, this was a clean continuation entry opportunity like this. That's why I would have entered. I like to put my stop loss 2 order blocks below, just depending on the type of volume and the day, and then look for 1 to 2. Again, in the opposite, you also didn't get that 1 to 2, right? So both sides were basically at a loss, right? Look for 1 to 2. Also didn't happen on Friday, right? So in terms of a day like this, doesn't matter which side your bias was on, you would have either broken even or would have taken a small loss or a small
So this
profit.
is just one of those days
Yeah,
where everything aligns and still you don't get the outcomes that you want because of the market decides on the day.
yes, yes, right. So these
Yeah,
days you need to factor in.
yeah.
Okay. But yeah, guys, any other questions? Any other concerns? We all good? All right. But yeah, guys, with your setups that you take throughout the week, right? Um, if you take them and you want some more feedback or just want to know if you're in alignment, send it to me. I might not be able to look at it during that same session, right? But when I have time, I'll obviously look at it and then nitpick and then say, look, this is what you missed, that's what you missed, or we can maybe add this or remove that, you know. But send it to me on Discord also, because all of the other messages I receive everywhere else just throws me off. But I want to prioritize your guys' things, obviously. Okay. But yeah, that's it for me today. Have a good evening. Let's have a positive week. I'm not expecting too much this week, but we'll see what the outcome is. After FOMC, we might have a good opportunity on Thursday, maybe on Friday. Like I said, I'm not in on Thursday, but you guys know what to do, right? Cool. Have a good one, gents. All the best. See you next
Thanks,
time.
thanks, thanks again. Have a good evening. Good week.
See you guys. Thanks. Bye.